I was reminded when you were coming on the show today that it's been 2.5 years since you started your own venture capital firm.
That's
and
right.
I'm curious, what's been the hardest surprise?
I think the biggest surprise for me has actually been how many of the entrepreneurs that we see that I end up rooting for. Of course, we may only make about 8 to 10 investments a year because we're playing a lead role in these financings. But there's a lot of people who come in with great ideas, early traction, and what I'm really trying to decide is, is it the right fit? Not, are they viable?
Right. You've invested in Ship, you've invested in the Skim, managed by Q. How are valuations? How do prices look to you right now?
I'll tell you, 2013 was a real learning for us. Valuations were going up pretty quickly in the seed stage. I think since that time, they've stabilized somewhat. One trend we are seeing is that experienced entrepreneurs may be skipping the seed round altogether more often and going straight to raising a large sum of money. We're not afraid to participate in those rounds, but we usually love to take a larger chunk of a smaller round as somebody's just getting started.
The Information does a regular survey of its readers, and today they talked about skepticism around certain companies, which is a hard thing to measure, but they said that there's been rising skepticism around Square, Dropbox, Lyft, Airbnb, on the other hand, very positive. What should we read into those kinds of reports? I mean, it's something that's difficult to put your finger on, but I wonder, are there whispers that things are worse than people say publicly?
I think, a lot of these companies are getting to high valuations, and we're used to seeing public numbers when these companies are at these valuations because traditionally they would have IPO'd and you'd be getting progress quarter over quarter. Because we don't have access to that, all you get to judge on is their latest app release or your own personal experience. So, it's interesting, but I'm not sure it necessarily tells the truth of what's going on inside of it.
So you're not concerned. Are you concerned about the overall environment?
I'm not. Sometimes people say, are we in a bubble? I think we're in a hot tub. It's getting a little bit warm. We're in that part of the business cycle, and there's lots of small bubbles, but they tend to pop very quickly.
And you guys recently hired a head of talent, right?
We did. That's a little unusual for a firm that invests at the early stage, but we think that in continuing to help our companies become not just great builders of product and businesses, but attractive places to hire the best engineers and the best designers is a competitive advantage.
Now, I have to ask you about Twitter because you're a big tweeter, but I'm curious, what do you want to see happen at Twitter?
I want to see them grow. I mean, the fact that they have, we talk about growth numbers, a few hundred million users. The question I ask myself, is there content on Twitter today that 1 billion people would enjoy consuming and talking about? And the answer is absolutely. Right. It just has to be exposed. Team
Jack or Team Bain?
Bain is so nice, isn't that the
He's so nice.
I think product-oriented founders are a unique breed. In this case, it's as I said, it's a full-time role, and Jack might not be available full-time. And so at least in Adam, you have somebody who was the founder of the monetization group. He started something that didn't exist before.